Quantum AI interests me. It interests me for a number of reasons. Number one, it's because it's technology, and technology always advances forward. And quantum computing and AI is the next generation of computer, software, data, power. It is the internet in 1995, when the internet was just starting up. And by 2005, the internet was tremendously bigger, okay? And I got some requests to cover quantum, and I said, well, this will probably be a good idea, because what I find, what I see in the quantum AI industry is there's some stocks I can cover like IONQ and D-Wave, which I'll cover today from a technical and fundamental standpoint. I give you technical analysis, TA, for the layperson, and fundamental analysis, FA, which many people on YouTube do not give you because they haven't been trained to give you. You can draw some squiggly lines and show some past trades, and that will be TA. But FA looks at the present and the potential future, where TA looks at the past, the present, and the potential future. FA doesn't really concern itself with the past. And I like that. I like now and tomorrow. That's it. Because with that story of now and tomorrow, and you take out the graphs, you can put together a logical explanation of what's going to happen on a probability-wise, and why it's going to happen. Where TA, you can look at the past and now and say, okay, based on these squiggly lines, it could go up or down. So first of all, before we get into that, I want to look at the market is up, right? The market has reacted. The Dow is now at 50,000, near 50,000, S&P near 7,000, kind of near all-time highs again, because inflation unexpectedly falls to 2.7. The market loves that. The market, when inflation is the number one risk of economic risk. It's not recession. People think it's recession. No, inflation is the number one risk to your economy. Drop a like and a comment if you want me to explain why. Some people don't want that explanation, but it's true. Now, I do see that, some macroeconomists say that, the November is not really great, should be treated cautiously. December's data, which will come out in January, so we have to curb our enthusiasm right now. I'm a Larry David fan. Curb our enthusiasm for the data that came out, although that data was great. 2.7 versus 3.1. It's a big miss, and it's a big bullish sign, which is why you see this, okay? And it gives me confidence to say, okay, let me talk about a couple of quantum stocks, because quantum is at the high end of the risk curve. It's the high beta stuff. Beta is systematic market risk. It will have high beta, high risk, high reward. And from a technical perspective, let's look at it. You have volume here. Let me get rid of that. So it's basically gone up from 20 cents to $11. That's the move I'd like to be on. I wasn't on it, okay? And then it hit the RSI. From a technical perspective, the RSI went very high, so it was very overbought. What that tells me is that there was a lot of concentrated money in only a few hands. If the RSI went to 65 and it went to 11, that means the money was more diversified, okay? That's TA. And then also a TA perspective is, it came down to the 50 RSI, consolidated, and then waited for its next leg up, maybe on earnings. You see this E, that's earnings. So that's some announcement, some bullish announcement that allows buyers to come in and push it to overbought again. And then it consolidates once again in a bull flag, and then something else happens over here, and it has another push up. Now, these push-ups are not as strong, don't have the volume of before. So that's why you're going to start seeing bearish divergence, which is a lower high on the RSI, but a higher high on price action. Volume tailing off means even less capital from less people coming in to drive the price higher, which if you're a good TA artist, you're going to say, okay, this is bearish divergence up here. I'm going to cover my ass with put options. I can buy some put options, but also hold the stock. So if the stock falls, I can profit on the put options. That's savvy trading right there. I'll use put options on stocks that have run. I don't necessarily want to sell all the stock. I'll keep some, and then I'll buy put options, buy the premium, and see if I can yank out some yield from that trade. Qubits. So Qubits, the name of Qubits is D-Wave. That's the company. And from a fundamental perspective, let's look at fundamentals here, which is more fun for me. On a yearly chart, market cap 10 billion, no earnings. So all speculation. Why all speculation? Because if you have earnings and you have a PE, you can get to market cap. It's a mathematical equation. If you have an EPS of 5 and a PE of 10, you can get to a market cap. You can get to a stock price per share. Because here's the math. The price is on top of the earnings. The earnings is on top of the shares outstanding. So those earnings cancel out and you get price per share. It's really simple, but people don't teach that on YouTube, which I'm going to be drilling that over the next 100 years that I stay here. So no earnings, no PE because no earnings, negative earnings. The banks put a target estimate. Don't listen to them. They're a bunch of fucking liars. You know, they'll say buy Netflix at $1,200 and give it a $1,300 price target. Meanwhile, all the insiders in Netflix were selling it, right? So don't listen to them. Fucking price targets don't mean shit. The thing I look at is market cap and earnings. Market cap is value. What is your stock worth? $10 billion. What is Cardano worth? $15 billion. Well, that doesn't make any sense because they don't have any earnings. Now, you would say to me, Macro Ghost, why is it 10 billion if the earnings are negative? Pure speculation. That's it. Like a shitcoin. Pure speculation. And why can it hold that value? Because AI, quantum AI is the future. Now, there's going to be winners and losers in the future of quantum AI, but we don't know who they are. It could be D-Wave is the loser, and IONQ over here is IONQ, D-Wave. IONQ is the winner. And you see again, let me just go to the fundamentals so I can follow a structured path. IONQ, you see it's very much like D-Wave, except there's one interesting thing going on here is that the weekly, we're on a weekly, the weekly Gaussian, it's playing off that Gaussian. So as a trader, as a technical trader, so I will buy 44, or even if it goes in at 39, if it wicks inside and comes back out on the weekly, I can put my toes in at 40, 41 and have a stop around 36, $5. So it's like 10% stop. And then have a sell at 68. That way my risk reward is asymmetric. My return expectation is higher than my risk tolerance. Okay. And as you can see, bearish divergence, just like on Qubit. But Qubits is way above this Gaussian. So my stop on Qubits would be 1810, 1787. Let's give it some room. It would be a much bigger downside. So I'd like to trade IONQ before Qubits because my stops are more transparent. Okay. And then if you look at the fundamentals, it's going to be the same shit. The analysts will spew their bullshit. Don't listen to that. Do your own research. And how do you do your own research? Well, you follow the company, you listen to earnings, you go on their Reddit page, you just follow them really, really closely. I'm short MicroStrategy, by the way, from 230. So yeah, covered circle, covered core weave. These will fly with market confidence. Silver as well, because silver is now more of an industrial commodity than a precious metal. So these are all flying around because of this. We have to stay diligent into the new year and see where inflation comes in. If inflation comes in this low again for December in January, I mean, the bull market can rage on for sure. Why not? That means the Fed is going to act. The Fed is going to lower rates because inflation is tame. It's becoming more and more tame versus their estimates so that they can lower interest rates, putting money into the market and allowing traders to speculate. If inflation was 3.4% versus 3.1 estimate, well, Inflation, as I said at the beginning of the video, is the most important and most critical factor of your economy. If you have high inflation, you are not going to make it. As a country, you are not going to make it. That is why the Fed should choose recession before high inflation, because high inflation will kill everything. Recession will only kill a few jobs. The recession is the lesser of two evils. So, if you made it to the end of this video, if you like this content, like, subscribe, and comment. I answer all the comments. I'm very reachable. I love my job. And I just discovered YouTube. I'm going to grow this fucking channel with you guys. Thank you very much. And I will see you in the next one.